If you've been looking for an investment that can spark your portfolio, then you're going to love what we've got in store for you today. Ever heard of Tesla Hunter before? We have. It's called NIO, and it could be poised to deliver investors some serious gains. NIO is a Chinese multinational automobile manufacturer headquartered in Shanghai. The automotive giant specializes in designing and developing electric vehicles. One of the key reasons for NIO's early success is its shift away from the norm. Most EV manufacturers create conventional charging stations so customers can keep their vehicles functional on the road. But this Chinese innovator advanced a step ahead and built battery swapping stations for its vehicles. A battery swapping station works by allowing owners to recharge their vehicles by driving to a designated battery swap station and parking the vehicle in a bay where a robotic arm removes the depleted battery and replaces it with a fully charged one. Although the high-tech charging station is a fantastic sell point, the stock's performance has been lagging behind. Just like most growth stocks even, NIO's stock has taken a hit over the last year, going from $57 a share to a low of nearly $9. But that could all change as the industry could be set to experience an unprecedented rise driven by the European energy crisis. The crisis could help NIO reclaim its place in the EV industry and gain traction in the international markets. Over the next few minutes, I'm going to walk you through why Europe's increased green demand and China's dramatic solar export increase in 2023 has been causing NIO green days. First, let's take a look at the company's performance. Going into 2023, NIO's management set a plan in motion to double their sales for the year. They teased major upgrades on some of their best-selling cars while announcing a new product lineup. NIO CFO Stephen Fang even confirmed their plan on live television just last month when he appeared on Bloomberg TV.
We are very confident to achieve our sales target in 2023 by focusing on three key actions. First, broaden the product portfolio. We are going to launch 5 new models based on our NIO Technology Platform 2.0 in the middle of this year. After transitioning all the models to NT2 platform, we'll be able to offer 8 models, complementary and competitive in diversified market segments.
Their strategy seems to have paid off when you consider what they've achieved regarding numbers. NIO delivered 8,506 vehicles in January of 2023, while their cumulative deliveries of vehicles reached a staggering 298,062. One of the company's premium sedans, the NIO ET5, currently stands at number 7 in China's top-selling premium sedan list. This is even more impressive when you realize the list encompasses EVs and non-EVs. But the company stands a chance to prove itself on the international stage with China's exports of solar modules set to gain further momentum this year. Let me explain how the momentum may supercharge the EV industry. You see, there's a global demand for solar power technology, driven by the green energy transition, especially as all of Europe appears to plan to cut energy imports from Russia. The quest for completely renewable energy resources is a global phenomenon. Since China leads the way in solar manufacturing equipment, the entire market has no choice but to rely on them for affordable products. Take Germany, for example. They rely heavily on solar cells sourced from Chinese manufacturers. Deutsche Bank data showed that more than 1/3 of Germany's small and medium-sized enterprises in the solar industry rely heavily on Chinese supplies. Now that we've covered just how important the Chinese solar industry is to the rest of the world, I want to show you how it could affect your investment portfolio. A green day refers to a day when a stock has gained more value than what it was worth in the previous day's closing. NIO has experienced a lot of green days in the past year, primarily due to the company's marketing strategy and the favorable climate for the solar industry. But the most notable and recent green day is the one that occurred between the 10th and the 11th of April. At the opening hour of April 10th, NIO was trading at $8.86. What happened next caught a lot of people off guard. The company stock pushed for a 7.44% increase. But it was bound to happen, and it's possible that NIO will have many more green days in the coming weeks and months. As things stand, NIO is trading at just under $10. At that price range, the company has an attractive risk-to-reward ratio, especially in the long term. But every stock has its risks and NIO is no exception. The company has common risks that any other company stock has, like cash burn, decelerating growth, highly impacted margins, and even competition. But Stephen Fang and the rest of the management team have done a fantastic job of mitigating them. For example, NIO faces fierce competition from companies like Rivian Automotive, Lucid Group, and of course, Tesla. Despite its success, NIO's earnings per share ratings don't stand a chance against the bigger players in the EV industry. Its sales growth, profit margins, and return on equity hover on average mark. Just last month, the company disclosed a per share loss of 44%, despite a 50% revenue jump. They also added a forecast of 68% growth for the year. At this point, you might be conflicted about what all the data I provided means. So let me summarize them and leave you with these final thoughts. NIO is losing a lot of money, but you can be assured that it's enjoying superb sales growth. For a stock that once traded at $60, it has a long way to go to reach its all-time high. Sure, it has its own problems, and the overall environment of China and EV startups may need to improve, but it could be a good idea to add more of this stock to our portfolio while it's still under $10. This stock can use its immense brand power in China and its influence in the international markets to become a worthy Tesla challenger in the coming years. As always, thanks for watching, and don't forget to do your own research before making any investing decisions. Like, subscribe, and let us know your thoughts in the comment section below.